All right, everybody, here we go. Welcome to my newest segment of Markets A Look Ahead. Let's try to put a perspective on the key dynamics affecting this market right now. And unless you live under a rock or happen to miss the big show last week, the dynamic trio, who am I referring to? Well, the current Fed chair, Powell, Janet Yellen herself, and yes, the very nice person who goes by the name of Ben Bernanke. Yes, they formed a committee, it seemed, to make the biggest attempt they possibly could to prop up this stock market. Let's put that into perspective real quick. It's kind of crazy. The day before this little party, the three of them were the stars, stocks fell 670 points. Well, that day, with all the, I don't even know how I want to put this, but let's just say cheerleading and promises to keep this market propped up. Yeah, we put on a 750 point gain for a net gain of just about 80 points in 2 days of trading. Not very impressive if you asked me. But the key takeaway from that meeting, very public, I mean, you look at the setting here, was this, that the Federal Reserve is about to embark on yet another money printing binge from here to eternity, continue to keep rates suppressed with that cash they print out of thin air. Remember, that's how they do it. They have to buy the debt. They can't just say it. And probably the most important key here that came out of Powell's own mouth was now the unwinding of the Federal Reserve's balance sheet is flexible. He went from on autopilot, in other words, it was happening, that's it, there was no intervention, to now we're flexible, and even when it's far as to say the Fed could reverse it, meaning, introducing a new round of quantitative easing. But however, isn't it quantitative easing? I mean, I don't know how to put this into another perspective for myself. Maybe some of you can because you're smarter than I am. If the Federal Reserve has now promised to keep rates suppressed from here till eternity, print cash out of thin air, doesn't that sound like quantitative easing to you? Exactly. And I think that's how the market is going to look at it. However, there are major obstacles here in this market. And the biggest one right now is this China trade issue. But let's put that on the back burner for just a moment. For weeks now, we have been getting profit warnings from the biggest companies in the world because we are in a global slowdown. They don't want you to know that, But even the mainstream understands this, and they are addressing this issue, kind of setting the groundwork for what looks like it coming here down the pike. So profit warnings, and then, Apple coming out with their huge warning with regard to forward guidance. One of the biggest companies on the face of the earth here. So look, the Federal Reserve can sit here and print cash out of thin air. They can suppress rates. And all this is doing, honestly, and you know this if you follow this blog, is creating greater distortions in the market, not allowing the market to determine fair value. And that means that the middle class is going to end up suffering greater than they would have to if things were not allowed to normalize right now. But they won't be for many, many reasons. Now, we'll talk about that too. I know this is getting a little long-winded, but let's move on to this China trade issue. It is huge. You've been watching how this has evolved. Whenever the market seems to be going down, there's a story floated out there right from the White House trying to prop up the market by saying, hey, you know what, we have a deal in the works, things are looking really good, mysterious phone calls in the middle of the night. It's the same thing. We had two exact same parallels with regard to mysterious phone calls in the night between President Trump, President Xi, a lot of progress. Well, where is it? There's no progress at all. All we're hearing out of China is war talk. And if you're following the news, you probably wouldn't even know that, actually, especially here. If you're looking at local stuff or anything that's being pushed down your throat by the major news outlets, look outside our country to get what the truth is. Because again, there's something going on here in our country right now, the United States. Everything is being suppressed, even the news. People are not allowed to think outside the box. You have to think their way, or there's no other way. If you go against the grind, you get attacked. It sounds like fascism to me, but that's just one perspective. So the China trade deal is going to weigh on this market. Are we going to get a China trade deal? Something's going to have to be worked out, no doubt about it. Both sides are going to claim victory at one point because both economies, both markets are in trouble. No doubt about it. And with that said, our market here, even with President Trump's now famous, buy recommendation is 4,000 points off the high. The market has essentially done nothing since his buy recommendation. We gained 1,085 points that day and kind of stayed flat since that day. We haven't done anything. We've had some pretty wild swings, but the market is still in a downward trajectory here. And we're going to have to watch how this plays out. So the dynamics are pretty simple. We have the Federal Reserve that has promised to play the game that our president wants played here, that is suppress rates, print cash out of thin air into oblivion, and now may even be reversing Powell said, it came straight out saying that the unwinding of the balance sheet is now flexible. I mean, my freaking goodness. It's an incredible thing here. Propping up of this market here, stock buyback programs, yeah, sure. All that, stocks are still in a downtrend. And even with the China trade deal, I would expect to see a bump. And depending on how the deal works, it really might not be enough to stop the downtrend in this market. So it's pretty easy to understand where we are right now. I think this week is going to be another big one for volatility. Big upward moves, big downward moves. And unless something comes out good with regard to China trade, we might get some fake stories floated out. So listen for that. Listen for fake news to be put out in an attempt to prop up this market. Because right now, the Federal Reserve is playing ball. The Federal Reserve is on the same wavelength as the president, finally. I think he's probably happy about that. A narrative he's been pushing for a very long time. Well, now he's got his wish. It's his Fed. He owns it. He bought it, period. He got it. So with that said, with the market now having support of the Federal Reserve and distortions will get worse, I still don't think the Fed's easy money policy right now is enough. I don't think it's enough to stop the downward trend of this market. Something else has to happen. And that might not even be enough either. Again, the distortions in the market are epic. Absolutely epic. We have over 10 years of this going on worldwide. So I'm not sure, and in fact I doubt it, quite honestly, at least right now, unless it's the biggest thing to happen, that a China trade deal is going to stop the downward trajectory of this market, because that's where we are right now. Anyway, going to be interesting to see how this plays out. I'd love to hear from you. I will read the comments. Let me know what you think. I love you all. See you in the morning.